Good morning. This is Jack from Charting the Markets, and this is the pre-market webinar of Wednesday, the 11th of March. Hey there. My disclaimer, I do this for educational purposes only. I'm here to share my technical analysis with you. I hope you can take some of what I'm doing and learn from it, transfer it to your own charts, and I'm not here to issue trading signals. This is a video for paying subscribers at chartingthemarkets.substack.com. It's published on YouTube after a delay of 24 hours. All right, let's have a look at ES. Now, I was talking on the bigger picture on Sunday about the fact that if the futures were a reflection of where we opened on Monday, then we'd be opening far below the 3SD lower bands on the daily charts, which is an unusual place and usually a pretty good sign that we're about to see a good rally. I was talking about the possibility we would see a strong rally from these levels, and we've seen that strong rally. Now, the question is, what happens next? Well, there's no good news, not really, on the Iran war. Obviously, there have been a lot of very destructive American and Israeli strikes. A lot of people have been killed. Some damage has been done. But the main thing is, in terms of regime change, which I think it's pretty obvious was one of the targets of the war. There's the son of Khamenei is now the new supreme leader. He is not too happy with the Americans, having just lost his mother, wife, and one of his kids to the Israeli and US strikes, and he appears to be, or at least the understanding is, he's more hardline than his father. The Iranian people seem to be more united than they've been in years behind the regime. The Strait of Hormuz is still closed, and the Iranians are currently mining it. And the American allies in the Middle East are making noises suggesting they're going to accept the Iranian offer to make separate pieces with Iran. And not allow the Americans to launch attacks from their territories. In which case, Iran has said that they will be able to use the Strait of Hormuz again, and of course, they're all exceptionally vulnerable to their desalination plants being knocked out of action, and that could make much of the Middle East semi-uninhabitable in the event that the Iranians start knocking those out on a serious basis. So they're very vulnerable, and they've got every reason to agree to make peace with the Iranians. The Iranians are currently they're getting questions about, they're getting approaches from the Americans about setting up for a ceasefire from Witkoff, the brain-dead envoy who's in the Middle East, dealing with the Middle East and in Russia. And they are ignoring all of those and saying they're not interested. So it does appear that the war is not going to achieve its main aim, which really was regime change. And the Strait of Hormuz is still closed, and the Iranians are mining it, and it maybe will be closed for months. And maybe about to lose all of the US's Middle East allies to making a separate peace. And the Iranians are basically saying they're not interested in peace, because the key thing is one side can cause a war by launching it. But for a peace, you got to have two sides. And at the moment, there's only one side interested in that. All right, so what does this mean? Well, it means that we may well be seeing more disruption on natural gas and oil prices. And it means that I'm not seeing much reason to think that we're not going to see more downside on equities. In the short term, we haven't got a lot in terms of sell signals. We've got a weak sell signal that's fixed on NQ. We've got another one that's fixed on DAX and has already reached a possible near miss target. Otherwise, we're seeing some pullbacks here. They're relatively modest so far. We've not got close to the 50% retracement I was thinking we might see yesterday. But this does kind of look like a head and shoulders here on ES, and is trying to break down. I'm watching to see whether this does break down, and if so, that would have a target, which would be about down here in about the 66.75 area. In terms of the news from the war, it's not really ugly yet. We haven't had a lot of extra deaths, but it's not good. I'm not expecting this to provide much cheer to the markets. NQ, still pretty close to the highs, possible head and shoulders forming there too. RTY, possible head and shoulders. So I'm wondering whether these are all going to break down and give us more downside today. Certainly there's not much to celebrate in terms of the news. So in terms of the rather ugly looking head and shoulders here on YM, DAX and ESTX and Nikkei pulling back, But I would say we've got positive divergence on the daily on the Nikkei, and we've actually got an RSI 5 daily buy signal fixed on DAX. But we'll look at those in a bit. All right, let's have a look at SPX first. Okay, SPX and ES, we've seen a strong rally. The obvious target is, and the obvious current resistance is at the daily middle band, and we got pretty close to a test of the daily middle band. So if we are going to rally and come down again, then, well, that's the obvious place to do it. We have got a head and shoulders, which is broken down in the 6540 area, and if we're going to make lower lows, then that would be the obvious place to go. The daily Bollinger Bands are widening, but haven't really widened much so far. In terms of the hourly chart, no current divergence. Yesterday we had an RSI 5 sell signal. I think we had this on all four of them actually. An RSI 5 sell signal on the 15-minute that made target yesterday afternoon. Looking at the Qs, we actually managed to get slightly above the daily middle band, which would be more impressive if it wasn't obvious that the main resistance at the moment is actually the 50 DMA. Almost made it to the 50 DMA, still above the daily middle band, marginally, closed marginally above it the last 2 days. Again, maybe setting up lower lows, but at the moment we're not really seeing any widening of the daily middle bands here, because NDX has actually been holding up better than the others, because this particular decline is not really about tech. In terms of the hourly chart, no divergence. 15-minute chart, we had the same. RSI 5 sell signal, we had the same on Dia as well yesterday, and that made target. In terms of the charts here, Dia and IWM have been particularly weak. We've only really managed to make it up to slightly above the daily lower band here, nowhere near a back test of the daily middle band. We've got head and shoulders, which has broken down here with a target in the 449, 450 area. And if we're going lower, that's a pretty obvious target we've got there. We've also got an RSI. We had an RSI 5 buy signal as well, actually, on the hourly chart. We've got an RSI 14 buy signal fixed. It's the only one. Not sure how much credit to give it. We'll see. All right, let's have a look at the IWM chart, where this has been pretty weak as well, nowhere near a move to the daily middle band, but these two particularly were ones, and ES, were ones where it was so far beyond the daily lower bands at the open on Sunday, not far after the open on Sunday, that I was really thinking normally we would see a big rally. We saw that big rally, but that hasn't got us back to the daily middle band on IWM, which has been particularly weak. The daily RSI 14 sell signal has reached the possible near miss target. We had the same 15-minute RSI 5 sell signal fixed, which has made target. No divergence on the hourly chart. We don't really have a pattern which is broken down here, but what I would say is there is a possible head and shoulders forming here right now, and in the event that we break down from here, that would have a target down in about I haven't measured it out, but I'm thinking the 215 to 217.5 area, with a potential larger head and shoulders neckline in the 227.5, well, 228 area. We will watch to see how that goes. Looking at DAX. DAX hasn't made it back to the daily middle band, but we have got an RSI 5 buy signal fix, and we've got another RSI 5 buy signal brewing on the daily chart on Nikkei. I'm wondering about that. It may be that we see we actually saw DAX and the Nikkei underperforming considerably the American markets last week. It may be that we're about to switch over to a period where that reverses. So we will see how that goes. But no big target down on Nikkei, no big target down on DAX, unless we are forming a head and shoulders here. And if we were forming a head and shoulders here, well, I think the left shoulder actually took 6 months to form, a lot. So I'm thinking really I'd be expecting more than a couple of days for the right shoulder. We'll see how that goes, but I'm thinking if this is a head and shoulders forming, then we may be looking at a significant amount of sideways action. All right, let's have a look at DX. Now, DX has been going up with the war. We've got a head and shoulders, a double top, which had broken down. That could be failing. We're seeing a bit of a rally here at the moment, although the weak 6-minute buy signal has already reached a possible near miss target. We have got that double top, isn't a bad looking double top here. We've got a double bottom, which is trying to break up on USD as well, although this is retraced now more than DX has managed. Not really seeing an awful lot on the rest of pop, and it's really interesting and strange. USD CAD bear flag channel. It is a nice, perfect channel. This looks like a bearish triangle forming. Might widen into a bear flag, but this has actually been going down while the dollar's been going up, which is really not what you expect. It's the opposite of what should be happening. So I am wondering if this is going to break down, retest the low. Not sure how much that would say about what's happening on dollar though. We shall see. Nice looking double top on Australian dollar. Not much to see on NZUSD. All right, let's have a look at CL. Now, CL, we were seeing big moves down yesterday on a blizzard of bullshit from the administration. This, I think, the low yesterday might have been made while the administration had, someone in the administration had tweeted that a oil tanker had been successfully escorted by the American Navy through the Strait of Hormuz. That wasn't true. Apparently, some random staffer did it, but there's been an awful lot of crap coming out of the administration here, and it's been rather confusing. But in the short term, we've seen a big retracement. We've got a potential double bottom set up here, and we've got a weak 6-minute buy signal fixed. We also have a similar buy signal fixed on HO and on RBOB, and we've got possible double bottoms on all of them, with the HO one already breaking up. So I'm thinking we could see a sizable rally in oil today. I was saying on Saturday, on Sunday at the Bigger Picture webinar that really I was thinking 120 was kind of overblown on CL, and that actually, while Strait of Hormuz would be disruptive if it happened, there were still sizable reserves, and it probably wasn't going to disrupt the market hugely. But I think really one thing that was worrying people was that actually, with desalination plants being hit, we might actually see a major problem across much of the Middle East with, in terms of, frankly, habitability, if they're having to import most of their water. So if the Middle Eastern allies make their own peace with Iran, that threat will recede. And actually, Iran is saying that they can use the Strait of Hormuz for tankers. So, although obviously they are also mining it at the moment. So, but I think if those mines are removed, if that traffic could go, this can actually just fall apart in terms of the bull case on oil here. In the short term, though, none of that has happened, and these double bottoms are credible, and we could see a sizable rally from here. So we shall see how that goes. All right, NG, on the bigger picture, I was showing this on the bigger picture webinar, but on the bigger picture, this is a tiny move. It's really not much at all. So, but we have seen a bit of a rally here. We've seen an IHS which has broken up. It looks like that might be failing, but could still make the target in the 3.6 area. If we do make that target, that still won't be a sizable move, really, even compared to what we saw in the month before the war started. So we could see a big move on the later. I'm not convinced. While an awful lot of the LNG traffic goes through the Strait of Hormuz, I'm not sure how large a proportion of that is of the world natural gas market, because an awful lot of that just goes through pipelines. So we're not seeing a big reaction so far. It might be that NG wouldn't be hugely affected, although it would be more affected in the European market. So looking at metals, still looks like a bear flag here forming on GC and SI. Not on palladium. This looks like a potential level bottom here, actually, but the sell signals reaching the full target at the moment. Platinum, this looks like a bear flag. HG, this was a bear flag triangle. That's broken down, didn't make the target of the retest this low here in about 5.61 area, and I'm thinking it may well be heading back to do that now, although the weak 6-minute sell signal has now reached a possible near miss target. All right, looking at the others, KC, the double bottom could be failing. 60-minute sell signal is getting into the possible near-miss target area, but hasn't reached it yet. SB, wondering if this might fail too. Sugar, really, bigger picture, looks like a downtrend, but for what it's worth, this larger IHS has broken up with still a target at a retest of the December high. Looking at CC, no, it's going up, but with no obvious bottoming pattern here. So I don't really have a target on the upside. Wouldn't be surprised to see this reverse back down, but we are currently breaking back up over the monthly pivot. Looking at CT, CT, nice looking double bottom broken up here with a target in the 65.95 to 66.15 area. Not seeing any reason to think that won't make target. Lumber, wondering about a resumption of the downtrend soon under the monthly pivot. Wheat, we saw a sharp retracement here, and we actually had a daily RSI 5 sell signal fix on wheat, so I am wondering about a period of retracement here. Short term, we've got a nice looking little level bottom, we've got a buy signal, and I'm thinking we may retrace a lot of that initial decline. Corn is retracing, has already retraced half of that initial decline pretty much. Soy, more than half, maybe retesting the high. If it does, I'm wondering about a potential level top. ZL, the same. Live cattle, I have mixed feelings about this. I'm wondering about a resumption of the uptrend, and we could see that on lean hogs as well. But we could see another leg down first. We shall see on both. All right, great. Let's have a quick look at questions. How low could the metals go? Well, I'm thinking. Hang on, wait a second. I'm just going to pull up the metals for you. Talk through what I'm talking about there, and I'll also spend more time on that on the next bigger picture. But let's have a quick look at that here. Now, we could be forming a couple of topping patterns here, which I'd be skeptical about them playing out. I don't think the bull market's over. I really don't. But I am thinking we could go lower first. What I'm thinking in terms of gold here is that we could well be forming a bull flag. If so, I'd be wondering about a move down into the support area here at about the 3,800, 3,900 area where this triangle was. That would be a reasonable area to go down with if forming a bull flag. Looking at silver, silver, I'm also wondering about a bull flag. Maybe a move down as far as 57 or 55 area, maybe a back test of this this old high at the 55 area. We shall see how that goes. I mean, looking at palladium, we've still got an IHS with a target in the 2550 area. I'm thinking again could be a flag, maybe get down to the 1350, 1400 area. 1350 would probably be ideal. Looking at platinum, we've already made the inverted head and shoulder target there. This could be a head and shoulders for me actually, but I wouldn't expect it to make target. I'd be thinking in terms of a flag, maybe make it down to back test of 1750 ideally, and then head up from there. Looking at copper, copper is a different story. Here, I'm thinking we could go considerably lower because, one, this is more about building materials, and two, we reached this and broke through this very, very important, because this chart goes back 55 years. We reached this very important resistance trend line, and we broke through it. I'm thinking this could be a very significant high, but obviously it could follow through on the break and go higher. If so, that would be a significant breakout. But until that breaks out, I'm thinking this could be a significant high, and mainly I'm thinking lower. All right, great. In that case, I think that's a wrap. Everyone take care. I'll catch you guys again tomorrow. Cheers.